Hello and welcome to this Wednesday's morning market briefing. We've got a lot to talk about, but firstly, rise in US core inflation highlights stubborn price pressures, as well as that Rishi Sunak secures win in Rwanda asylum vote. We've got lots to talk about on the charts, also with lots happening on the economic calendar. We'll come to that near the end, so make sure you stay around till you see that. Before we get straight into it, make sure to subscribe. But the first article to talk about, of course, is this rise in core inflation. Now, US core inflation rose last month, bolstering hawkish views on the Fed's monetary policy, with this possibly making the point that rates may need to be on hold for months to come. Now, we were kind of talking about this yesterday, as well as at the start of this week on the kind of weekly market briefing, where we kind of look ahead. And we noted the fact that this kind of core inflationary figure would be coming out just a day before, the Fed's interest rate decision, which is taking place today. And so that's going to be, of course, very important to look out for. But most importantly, before we go into that, we need to understand what's going on with inflation, as inflation obviously does drive the way the Fed does shape their monetary policy. Now, most recently, we've actually been seeing inflation come in below expectations. So we've actually seen a decline in inflation beyond what we might usually expect, or what economists were expecting. And what we did see as a result of that was that large sell-off on the dollar. That rise in US indices as individuals started to price in the new kind of period for the dollar and US indices, as obviously if interest rates are lower, if interest rates are cut sooner than previously expected, then that's giving way to greater business expansion, therefore US indices rise as a result. And also, it means that the dollar's worth less in terms of, people keeping their money in US deposit accounts and then earning the interest of that. And so we did see that flow of money out of the dollar as people began to price that in. As people were even pricing in, the first interest rate cuts as early as March, when we were seeing these inflation figures fall quite early on. But what we've seen from this most recent figure, is that inflation won't necessarily be on just a smooth and complete decline. Core inflation has almost stalled in its move to the downside, and we are seeing it actually come in above expectations for some economists. Now, figures published on Tuesday showed US core prices rose 0.3% during November, whilst remaining flat at 4% year on year. Now, this data comes just before the Fed's interest rate decision today, where rates are expected to be held at that current range of 5.25 to 5.5%. Now, when we previously spoken about expectations for the Fed's monetary policy, we have noted that following the most recent falls in inflation, the markets have started to price in the fact that the Fed won't increase interest rates anymore. That said, that's in direct kind of difference to what we were expecting, let's say back in September, where we were still pricing in a further interest rate rise, maybe by December, which would be the interest rate decision today. And that's quite interesting to see now, is how we've kind of revised those expectations, and now, despite this kind of difference in the way the market was beginning to perceive inflation, at least with this data release, we are still expecting rates to be held where they are. The key debate at the moment is when rates will start to be cut, not about whether they'll be cut today, let's say. Now, the headline rate did fall, however, but only to 3.1% from that 3.2% mark, and stayed in line with expectations. And now this is in difference to what we've had actually on the most recent inflation data releases. So previous to this, the two data releases before that, we did actually see inflation come in below expectations, and that's why we did see such significant moves on markets such as the dollar and US indices. Now, the data released yesterday has seen markets price in the fact that the path to bringing down rates next year will be bumpy, with markets, however, still anticipating a quarter point cut in rates by next May. Now, that was the general consensus, I believe, about when rates will be cut next year. However, some people were already pricing in rates to be cut by March. It does seem that will only be May now. That does seem to be the consensus, with US stocks edging higher and European stocks edging lower, surprisingly. But obviously, we need to wait and see how that plays out tomorrow, which is when that inflation figure will be properly priced in by the Fed's interest rate decision and rhetoric surrounding the figure that we received yesterday. Now, Powell in today's meeting will be even more inclined to shut down rate cut expectations, and that's what we were talking about yesterday. Is Powell's continual rhetoric on all of these kind of inflation data that we've received, is that we need to wait for the long-term data to be released, see lots of different pieces of data before we can make an overall decision on when to cut rates or whether to even raise rates. And that's what his general message has been, and it does seem that that's going to be even more important to kind of reiterate after we have received this data yesterday. The Fed also today releasing its economic projections, with this data largely influencing, with this data release that we had yesterday likely influencing those predictions, with the less optimistic view presented in the inflation's data being largely driven by housing-related costs rising 0.5% during November, as a result of partially offsetting falls in energy prices that we have seen with those declines in oil's prices. Strong US jobs data shown in last week's NFP also led investors to walk back their expectations for rate cuts beginning in March. But that's all to talk about in this article. We've spoken about it a lot, but keep your eyes on the Fed's interest rate decision. We'll come back to that near the end, so make sure you stay around till you see our economic calendar kind of discussion, as we will come back to this US inflationary data and the Fed's interest rate decision today. But next article to talk about is Rishi Sunak secures win in Rwanda asylum vote. Now, Sunak beat a party revolt over his Rwanda migration bill yesterday, winning 313 votes for the bill against 269 votes against. Now, this comfortable victory, however, required great pleading and arm twisting, risking the fact that the revolt may be far from over. Now, not a single Tory MP voted against the bill, with 38 Tory MPs abstaining or absent. Now, Rishi Sunak obviously will be going into the election year next year. Now, the question is when this kind of election will be placed, as of course the government in power following the removal of the Fixed Term Parliaments Act will have the power to decide when the vote takes place. And so it'll be interesting to see exactly when Rishi Sunak lines up the election to take place, as he is seemingly trying to get this bill implemented in before the next election. So quite possibly even this bill itself will heavily impact the way that the next year's election will go. And obviously that election will be very important to understanding what how the government will look at the economy and how the government will handle the economy, with the government in power and the opposition government at the moment both having very differing opinions on how the economy maybe should be run. Now, not a single Tory MP voted against the bill, with 38 Tory MPs abstaining or absent. The Rebels, however, have threatened to vote down the bill at the next Commons vote, and that's the key issue here. Is this is only the second reading. It's very early still on the legislative process, which a bill does have to go through. And this is still only within the Commons. This hasn't even gone to the House of Lords yet. And so we can't say that this is a complete win for Rishi Sunak just yet. There's a very large chance that it's voted down in the third reading, or even comes into great issues within the House of Lords, and therefore, great changes need to be made, or it just falls into a kind of ping pong match between the House of Lords and House of Commons, which often can happen. And so we can't say yet that this bill is, of course, has gone through or will be implemented necessarily, and it's still a point of contention within Parliament, most definitely. Now, with their demands, the rebels' demands being the tightening of the legislation, which they believe is too weak. Now, Sunak urged the rebels to back him over breakfast in Downing Street, with Sunak wanting the bill, to have the bill in practice by early 2024, ahead of next year's general election. Sorry, I couldn't get that out, but that reaffirms what I was saying earlier in relation to Sunak wanting this bill in place before next year's general election. Now, there was great nervousness over the vote, with all MPs being recalled from overseas, obviously to make sure Sunak had as many votes on his side, but also for the opposition government and the other parties within Parliament that wanted their MPs in to vote it down. Now, Sunak has since promised rebels he was opening to tightening the bill in a way which seeks to limit the chances of migrants successfully appealing against being sent to Rwanda. That said, the moderate One Nation group of Tory MPs warned Sunak against any tweaks, as they believe that even at the current state, the bill goes too far to the right wing almost, and is too harsh on the asylum seekers. Now, the stage the legislation was at and the vote which did take place has seen no government lose such a vote since 1986. So, at the second reading, the government in power has never lost a vote, with the legislation being brought forth following, of course, the Supreme Court ruling it unlawful. That's all to talk about in this article, though. Keep your eyes on UK politics, as it will be heavily affecting next year's general election, which will definitely influence the way people perceive the UK economy. Next talk about, though, of course, is the charts, where we, of course, always need to start on US indices, with the US 30 being to note. Now, yesterday, we commented on the fact that, finally, the US 30 had broken out of its range, which price did end up sitting in, coming into the end of, actually just throughout the whole of last week, really. We did see the US indices, after that strong push to the upside, we did see it kind of range about. Interesting to see, though, is that despite the inflation data today showing that core inflation, in fact, did rise month on month, we have seen the US 30 continue to move to the upside after we did see price breakout from that range beginning this week. So we are seeing that move to the upside. It will be interesting to see where price may stall out. Obviously, going into today's Fed's interest rate decision, the markets will heavily be influenced by that, so it'd be interesting to see how the US 30 does react. Quite possibly, if we're still expecting bullish momentum after the meeting, we could be using the Fibonacci retracement tool to find out where price may retrace down to when the market clears, and then see where price can then go. So keep your eyes on this. Next talk about, though, is the dollar, which is kind of in an interesting position as we do go into this interest rate decision, as we have seen signals that the dollar is reversing and beginning to go back on the upswing. However, dollar has continued to fail at this strong area of resistance and liquidity, as we have noted just here. That said, we have formed this counter trend line, as I've noted here, which price did come very close to contact with yesterday, and it'll be interesting to see how the dollar does perform with this Fed's interest rate decision, and whether the Fed's rhetoric, as we do know, we're most likely to expect no cuts or raises in the interest rate. So the key thing that we'll be listening out for is the rhetoric following the meeting. So, understanding that rhetoric will definitely drive the way the dollar moves from its interesting position that it's currently sitting at. That's all to talk about on the dollar, though. Euro USD to talk about next, which has continued to move away from this area, which we did note as a potential bullish buy-in for Euro USD. Now, we had noted the 78.60 and that liquidity level as a strong area for buy-side momentum, largely because the 78.60 is a very strong reversal, or at least continuation of that retracement Fibonacci level. And we understood that there was a strong area of liquidity around there, and price had previously reacted to other areas on the Fibonacci retracement tool, however just not enough momentum, so we assumed that the greatest deal with momentum would be at that last point on the tool. From that, we have seen a significant move away from that point, and a move to the upside as a result. That said, we still haven't seen that high level of momentum that one might expect from this area of liquidity and Fibonacci level. So quite possibly we haven't actually made any gains to the upside. Obviously, Euro USD will be heavily impacted and influenced by today's Fed interest rate decision. So listen out for that once again. Pound yen, there's not too much to note apart from the fact that it does seem pound yen is now retracing in a very slow manner. It's hard to determine whether pound yen will now be on the slow decline, or in fact this was just once again another kind of flash crash, another fake out, and price will continue to the upside. So just keep your eyes on pound yen as the market does settle. Next to talk about though is Bitcoin, which we did talk about yesterday, having seen Bitcoin fall to the downside and tap that 50% Fibonacci mark. That said, price is still sitting around that area, which is contrary to what we might expect from a retracement, where price may come down, maybe in a more slow manner, and then see a significant move to the upside as price does continue. The fact that we're not seeing that could give us bearish signals, and if we do use the RSI, what can we see? Not too much, it does seem, but of course, when price did fall to that 50% Fibonacci mark, it did move into that oversold territory, and we did see that move to the upside. So maybe that's something to know. However, it will be interesting to see how Bitcoin does move within the coming days. I think, as we've seen with Bitcoin's move to the upside, the Fed's kind of monetary policy outlook will heavily influence the way Bitcoin does move, and so I think that will be very important as well when we're going into perceiving the future for Bitcoin. So listen out for the Fed's interest rate decision once again. Gold, on the other hand, is still sitting around this liquidity level and 78.60 Fibonacci zone. And this is despite, the core inflation figure that we did receive yesterday. But I guess the markets are still waiting on, the Fed's ultimate rhetoric, as not too much was actually noted from the data that we have seen. It was still in line with expectations. The inflation data is what I'm talking about. That did still come in line with expectations. So maybe we're just waiting on that rhetoric. But once again, that will be heavily influencing gold. So the Fed's interest rate decision is basically what's going to be pushing markets today, is the best way to summarize the charts. Next to talk about though, and lastly to talk about, of course, is the economic calendar, where we do have lots and lots of very important data coming out today. Now, firstly, we will be receiving British GDP figures and balance of trade figure. Now, that will be important, of course, to understand how the Bank of England may be perceiving the UK economy, and it will also help us understand how the UK government may move into next year's election year, as obviously taking this data will be very important to framing a positive image for the government if they want to be re-elected. So listen out for this. We are expecting a GDP figure year on year of 0.6% and a 3-month average of 0.1%. So listen out for that. The next bit of data, though, we will be expecting, or less so data, but kind of economic event, will be a Chinese loan auction with new loans being issued, as well as that we will be getting Eurozone industrial production figures being released, as well as US mortgage applications data. Now, going into the territory of more important pieces of data being released today, we are getting the US producer price inflation figure. That's important, of course, because we have now seen the consumer-related inflation figure, but the producer price inflation figure is very important for understanding how inflation is affecting that, the depths of the economy, I guess. So listen out for that, as well as that we will be getting, most importantly, the Fed's interest rate decision, along with their press conference, which will follow. So listen out for that, most definitely, along with the economic projections, of course. And finally, we are having, the New Zealand GDP growth rate figure being released, as well as the Japanese growth rate figure also being released. But that's all from us at Wildwood Capital. We've covered a lot on the articles, lots on the charts, and lots on the economic calendar. Hope you have a great trading day today. Listen out for that Fed interest rate figure and rhetoric. But that's all from us once again. Have a great trading day. Bye.